Well, let's take a look at what we're seeing in equity markets at the moment, and perhaps what's in store for local stocks, particularly in the wake of Donald Trump's election win. Darren Thompson joining us from Equity Trustees. Darren, good to see you.
Good to see you too. Thanks for having us.
Well, I'd like to say the dust is settling on the election, but it's not, is it? Because now we've got Trump appointing his cabinet. We don't really know what his policies in full are going to be until, I guess, he puts his feet under the desk there in the Oval Office. Overall, though, this has been painted as very positive for the states in terms it's going to be more protectionist, perhaps to the detriment of the rest of the globe. Is that your view, and how do you see Australia being affected?
Yeah, no, it's an interesting question. I think Trump is a very polarising political figure, but in terms of markets, he's seen as being quite positive. And obviously, as you say, his policies are quite US-centric. The tax cuts, the tariffs are likely to fuel and have led to an uptick in forecasts around US economic growth. If you looked at the other pools around the globe, Europe, it's already weak and it's likely to stay weak. China is already struggling, and again, higher tariffs on China are likely to see that area of the globe struggle. And in Australia, we've already got a pretty anemic economic environment already. So I do think it will shift economic growth to the US, which is already part of the trend, and it will reinforce that. So I think an uptick in forecasts into 25 and also into 26. Then as to how it sort of manifests itself for Australia, I think one of the outworkings of the policies of Trump are a stronger US dollar, and obviously we do have a lot of companies that have global businesses and are leveraged to the US as well. So there is the ability to leverage that US growth through domestic stocks or domestically listed stocks. One obvious impact is that further headwind for China and the impact on the resources names. We're already been a bit cautious around resources stocks, and particularly iron ore, as the Chinese economic growth story has been soft, and frankly this is likely to just be a further headwind around that. So I think resource stocks are a little bit of an issue. Our bank sector is probably going to be largely unaffected, but it's pretty anemic. So what we're looking for is stocks that have global growth aspirations or aspects to them, and also have the US dollar strength.
All right, just before we explore those opportunities, let's look at the potential negatives. You've focused there on resources. I mean, we've seen commodity prices continue to fall since his election. You take a look at iron ore, copper, gold. So are they sectors then you're likely to avoid?
Well, of course, there are definitely sectors where I think there are headwinds. Now, there are the underlying thematics, and then there's the price you pay for those assets. And so some of these themes have been getting priced in. So certainly resource stocks have been weak leading into the election and subsequently. We still think that's probably got a little way to go. So it's certainly an area where we're not yet ready to invest, because we do think that that those headwinds are going to persist. And it's difficult to see that in particular in relation to China, that the measures to date announced by the Chinese authorities are going to have the desired impact to elevate growth in that economy.
So how do you feel about some of the bigger stocks, such as the iron ore miners then?
Yeah, so we think that essentially we're underweight them. So we're placing our positions elsewhere. Look, they still are good cash generative businesses. They do still pay very nice dividends, and so they do form a component in our portfolios. But we still think that it hasn't fully played out yet. But we continue to assess them just to see where value emerges.
What's your view on gold, given that sector has done very well of late, given where the gold price has gone to, having hit a record? But as I said, since the election, bullion has come off, and we're seeing that weakness emerge about among some of the gold miners.
Yeah, so gold is an area where, look, we are very much fundamental investors looking to identify businesses that generate cash flow and pay dividends. Now, gold doesn't necessarily fit easily into that characterisation, but it is a store of value, and it is a place where we gravitate to in times of uncertainty. So I think gold plays that role within portfolios. As you say, it's at all-time highs. And you've also then got the operational aspects around some of the gold miners. So even if you were playing gold, stocks like Newmont have had disappointment around operational pieces. So we would not be overweight gold at this point in the cycle. Rather, we'd be looking at good quality operational businesses that spin off cash flow and dividends.
All right, so let's turn to the positives as you see them. Perhaps, as you say, those companies with US exposure that stand to benefit. Where you'd be looking?
Yeah, so certainly we do have a lot of global growth companies in Australia, whether it be Macquarie or Brambles and a whole range of companies. A couple of companies which we think are really still have upside value, have moved but still have further to go. Companies like Computershare, the largest share registry company in the world, very much a US dollar earner, also has a meaningful part of its earnings driven by the float that it holds, the cash that it holds as part of its business. And although there are interest rate cuts priced in, there are fewer cuts priced in than there were recently, and we think that margin business will be resilient as well. And it also will be a beneficiary of further economic activity or the heightened expectation around activity. So that's certainly a positive. Block, which is the business that bought Afterpay. So again, that's leveraged to small business transactions. So to the extent that economic activity is anticipated to be resilient in the US and around its payment system, it's certainly very positive. The Afterpay business will be positively disposed from greater consumer, more resilient consumer activity. And finally, it also is a facility for trading Bitcoin. So it's one of the few ways you can get some ancillary to the big Bitcoin rally that's been coming through post the Trump election result.
More broadly, how do you see equities travelling as we head towards the end of the year, and you seeing the US perhaps outperform compared with Australia? Yeah,
so we would say that equity markets are expensive by historic measures, so it's hard to get really comfortable about valuation, but the reality is that incrementally things look better. So this idea of soft landing certainly in our mind is far more likely. You've got to hand it to the central banks, the Fed, RBA. I think they've managed the interest rate cycle well. That might not be a popular opinion, but that would be our view. And so I think that economically things look more resilient. So although things are expensive, to be honest, momentum is likely to remain into the new year. So we would stay invested in growth assets like equities.